All right. I believe we are ready to rock and roll. If you guys can hear me, say yes in the chat. I believe we're rocking and rolling. Woo! All right, everyone. How's your day been? '21 has not disappointed. That's for sure. 2020 kind of carried over. Yeah, so I know today's Q&A. Figured I'd go over probably a couple of my plays from today first, and then we can hop into some questions. So, got stocks to trade running here. So let's go over. Main play I was looking at going in today was LKNCY. So this one, if we zoom out here, just double checking everything. LKNCY I talked about in Twist a couple of times. I talked about in Small Cap Rockets, which is just my chat room that I'm with Timbo and Papa John over in Stocks to Trade. I've been watching this one for quite some time because of how it ran back in December, and then it started holding up, and I thought today we could certainly go see a breakout. So was watching this one over the 9 level here. As you can see, 9 topped out a couple times here. And that kind of became the trigger for me the other day that, wow, like this one actually has the potential to break out. It didn't get there, but still really good trade. Had great mornings. Once we got over this 9 level here on the 12th, great morning spike. 10 was the next level. That one held, so I grabbed some over 10, swung it. Really wanted to see another morning spike. We didn't get one, it gapped up. So I locked a bunch of stuff in right when this started to fail. Just was weak. I believe they have news tomorrow. I haven't done much research on it, but I wanted to get out because I saw a bunch of new rumors of news. So we'll reevaluate tomorrow once we know if any news is out and what's going on. My next one, best one was definitely BTSC. These are all the Bitcoin runners. I got BTCS here. If we just go look at all these, they've just been going crazy since the Bitcoin chart. Bitcoin started breaking out to all-time highs. I think it's around 39,000 right now, so it's still like up basically 100% from its previous all-time highs in 2017. So all these OTC Bitcoin plays started going off. BTCS I would consider the leader. I mean, at the beginning of the year, 2 weeks ago, it was at 20 cents, and today closed at 306. But that one was just a bit overextended for me. It had a great pattern, but I think the reason, if any of you tried to trade it today, it just failed to follow through really or break out to new highs, is just getting exhausted. It's very overextended. So we'll see what happens. I'm watching all these for panic dip buys going forward, but if Bitcoin remains strong, it could certainly keep going. But BTSC was the one I actually took. As you can see, it has a very similar daily chart, just straight up following Bitcoin, all the Bitcoin hype. I noticed 10 cents today became a solid level midday. As I was mentioning to some people, just in small cap rockets, there was at one point like 1.2 million shares at 10 cents. So that became my trigger, and you can see the volume coming in here when it actually broke the 10-cent level. We had a nice run, sold up into the strength. My best sell was at like 12 cents, I think, right around here, right as it started to fail again. Notice it was weak. BTCS was weak, but still, that's basically 20% from my best entry to best sell. I'll take that all day. That's really all I traded today. I liked Vissel. I mentioned that one in the challenge chat. Because again, like, it's just a beautiful daily chart, but this one just didn't have the juice. So it's good to see some failed examples. Because we look at it, like $2 was a nice top here. I mean, even back underneath this in the 190s, So 190 to 2 was a very nice level. And going back 2-3 years, like over those levels, there's just not much resistance all the way up until like the 4s. So I like the daily chart a lot. I thought the volume was good, but as we can see, it just failed to spike. Formed a great intraday pattern, perked up nicely, and then just collapsed. And probably fails going forward. I'm going to keep watching it just because the daily is pretty nice, but it's just not as good. It's probably like a B play instead of like an A plus setup for me now. But we'll still keep an eye on it. We got some other drone plays running like UAVS. So yeah, let's go in. The chamber hall effect. Let's see if I can change any of that. Hopefully it's not too bad. You guys can hear me just fine. Word. I saw SENS. Man, I was just early on that one. But let's go pull that one up. SENS, I liked a long time ago. Oh, and it's really going now too, of course. But they had news a couple weeks ago, yeah, on the 23rd. They mentioned Pfizer. Let's see if I can actually find the exact article. 23rd. Maybe it was this one. I'm not sure which article it was. Must not be that one. But I remember them mentioning PFE Pfizer in the press release. And so I got on my radar when it gapped up, started holding up. So I started sizing into these dips with a risk on like the high 80s. If we pull up, we probably have to go back a month. You can see the intraday pattern like really starting to form. Take off extended hours. So yeah, so once this was the day with the news, it was the 24th. That's why it led to this big gap up. And then pulled back, and we just started basing, and then we started basing a little higher. So right into the beginning of the year, I don't remember my exact dates. It was either the 31st or the 4th, first or last trading days. I started scooping some shares up, and then on the 5th, I noticed some more volume than usual, added some more size, and we ran right up into the breakout. Fortunately, it failed, and I kind of just took it off my radar. Hindsight, probably should have kept it. I had a good trade on it. Traded it as good as I could. There just wasn't any follow through. Got to take what the market gives you for sure. But it continued to hold up, held those same levels, and did basically the same pattern again. And now it's running. We're at new highs. We're over 35. So it's a pretty nice breakout chart. If I recall, there's like no resistance over that one too. Maybe I'm mistaken. Yeah, we got some resistance back here in the 170s, but if this goes to 170 and you're in it from the low ones, like that's a great trade in my opinion. So we'll see. The volume here is also significantly higher than the volume back here. So this resistance might not matter should the volume be big enough. So I'm definitely going to put this one on my watch list for tomorrow. Great follow through. That's awesome. Do I buy strength or buy weakness on NASDAQs? Yeah, so that's a really good question, actually. BNGO is probably a good chart to show. Or BIOL, I actually traded, so that one probably is going to be a better representation. This one I traded yesterday when it started breaking out. So you'll probably know a similar theme. If it's a breakout on the daily chart, I'm pretty much always interested in it, especially if it has news and has volume. One thing Kyle, Jack, and I all mentioned on Twist yesterday, well, the episode came out today, so definitely check that out, was like, this is the January effect. And like, none of us were really thinking about it because like we were just used to the hot market. The market was super hot into the end of 2020, but the January effect came on, which basically happens every year. This year it's crazy. Some years it's less crazy, where low float stocks, small cap stocks, low price stocks will run in the beginning of the year. My understanding of it is basically into the end of 2020, end of any year, there's usually a lot of selling. So there's more sellers than buyers. So a lot of stocks get beaten down because people are taking their losses so they can write it off on their taxes for that tax year. So then come the new year, those sellers are gone because they've taken those losses. So now, like fundamentally, it shifts, and there's more buyers than sellers because just that reason to sell no longer exists. And you combine that with like everyone's New Year's resolutions. Like I'm sure over the holidays, like you heard stories or people told you about that friends, family killing it in the stock market. So this year more than ever, everyone wants to be a trader. People probably made it their New Year's resolutions. This is their year sort of thing. So all those factors, like there's just been crazy number of small cap runners, especially the ones under $1, like BIOL, which I know I got a little tangent there. But on the 12th, once again, there was some press release. To me, it doesn't really matter how good the news is. So they announced right here, they announced an agreement with DSO Dental Care Alliance to expand laser adoption in dental offices. Like, what's that mean to me? I really have no idea. But clearly the market liked the news, right? And that's pretty much all that matters. If the market likes the news, like I want to be involved. So this one gapped up towards the breakout, and I didn't want to chase it through the breakout level pre-market. So this was an example of I started buying some weakness and then actually bought strength too. So it's totally situational. I got in on these dips pre-market or just after the market, apologies, because I thought Bone likes to call it like a dip and rip type of setup, where just like a stock gaps up huge, if it dips, holds the dip, like there's a strong chance it's gonna rip. And then when you factor in all the other stuff I've been talking about, like low float, sub $1 stocks have been running, market's hot, lots of volume, like just the more factors you can add into any play, you're gonna get a good runner. So I bought this dip, and then I actually even bought strength here over 74, 73.5, and then I sold into that morning spike. The key, I'm not gonna say buying dips or buying strengths wrong. There's no right answer there. It's just when you set up your trading plan and you're making, like you're trying to determine what you're gonna risk, you have to factor it in. So if you can buy a dip, odds are you'll be able to get more shares with a tighter risk level than if you were buying strength. You're probably gonna have to buy less shares in order to risk the same dollar amount. So yeah, so like what I mean by that, like on this example, say I was risking 68 the low a day. If I was able to buy this dip and get in around 69, and I want to risk $100, like I'm able to get, what's that, 10,000 shares? Not 1,000 shares probably, 1,000 shares here. But if I was to buy the strength and also try to risk 68, my risk at this point is basically 5 cents. So I'm not going to be able to buy the same number of shares. And it's important that you're always basing the number of shares off the key risk level that you want. So then that way, like you don't take those big losses. You're not scared to cut your loss. You know, you gotta make your plan. You gotta stick to your plan. So whatever the market gives you, like that's basically what I do in terms of buying strength or buying weakness. One of the other patterns I wanted to bring up on bio, I was buying weakness or dips into the afternoon here when it started forming, like basically an ABCD pattern is like the textbook definition. You could probably Google that and it'll give you some textbook answer. But basically it's just like a morning spike like we see on BIOL, and then a pullback, and then the trend continues with a series of higher lows through high a day. That's like big picture what I'm looking for. So in this example, I don't remember my exact entries. I think I posted the chart on Twitter. I started buying dips and then it pulled back. I bought some more dips. And with each dip, I usually move up my risk level to the previous dip because the idea is the trend is going to continue. So at a point, if the dip breaks below the previous dip, like the trade for this specific setup is now no longer working. So I will get out for basically the same starter loss, even though if the trend continues for a period of time, like I'll be able to get some pretty large size, and that's how, like, risking small amount of money, I'm able to make, 10 times my return if the play works. Now, it doesn't work every time, don't get me wrong. I just showed you Vissel, which was a failed example here, but when it does work, you get trades like BIOL, which ran up to 130. Sadly, I think my best sell on this was like 90 cents right into this like first push. So this is what it is. That's usually my take on that. Probably super behind on questions here. Can you give a rundown of your prep for the next trading day after the market close? Yeah, so this is a pretty good time. Usually I do it closer to like probably 10 p.m., like right before I go to bed. But like for any given day, throughout the day, stocks will come on my screeners, my scanners, and then I add them to my watch list, which is over in E-Trade. And I just will put them on a list, and then I flip through them at the end of the day, see which ones held up, see which ones are like setting up for possible breakouts tomorrow. And I just go through each ticker and try to figure out if it's still a play or not. So that's just like the preliminary thing, where I'm just trying to find, which stocks I was looking at the day before and I want to look at the next day. And usually those stocks are my main focus going into the next day, just because I'm already familiar with them, where I might not have watched them all day, but I watched them enough, or at least saw them, where I kind of have an idea how they trade. So that way I have some more confidence going into the next day. It looks like Sens just keeps going higher. It's crazy. And then afterwards, I will go through my scanners. So these settings, I'm trying to work on putting together like a little ebook or document for you guys on my scanner and how I use them. I've got a couple. These are my three main ones. This midday VWAP hold, stole from Bowen at Stocks Trade and then just tweaked it a little bit to more fit my strategy, change some of the settings. But this is the one I use basically solely for listed stocks. Feel free to screenshot it. But I will walk through basically what it is. So for this one, it says stocks over $1. I usually flip this on and off. That's just the default. But usually, if I have a sub $1 scan, so that's why it's defaulted to this. But over $1, I don't want a huge market cap. So under 300 million is something I would consider playing. It's up over 10% on the day. So I want, volatile stocks to be moving. Instead of volume, I use dollar volume on this, and I want to see over $25 million traded that day. So then there's plenty of liquidity. I don't really have to worry about liquidity issues or anything like that. And then the last factor is VWAP, which is volume weighted average price. It's an indicator. Basically, it looks like a moving average if you're not familiar with it. But the basic premise is it shows you the average price people are in the stock based on volume. It's not perfect, it's not a holy grail, it can be totally skewed by big volume candles, but it's a decent indicator. I just want stocks to be over VWAP by 2% or more. So that's my scan, and I usually run this in the afternoon, trying to see which ones are holding up end of day, because one of my most successful strategies that I just trade well are stocks that have a morning spike for whatever catalyst. I usually miss those because I'm playing the stocks that are on my watch list from the night before, and then they hold up, either form like the ABCD pattern like I was just talking about, but ideally they're just holding up near highs, and that's usually what VWAP should tell you, is should give you the price of a stock pretty much near the highs, and then I want to try to formulate a plan. So usually I'll flip through each of these. I'll just go through one check, which actually is a really decent example. Had some work stuff to do today, so I wasn't super focused, but this is a beautiful high day break here, and then run. The range on it isn't crazy great, but even a decent daily chart, there's some resistance overhead, but it's a former runner, and this is kind of the first green day after the run. So this will go on my watch list, probably towards the bottom, just not something that's super important. As you can see, like this would have been on my scanner. Let's throw VWAP on the chart. If I would have ran my scanner and paid attention midday, say like noon, like that's the chart I would have seen. And that's beautiful chart. So the scanner, I mean, lately it's been throwing out some crazy, more tickers than I'm used to. Usually I'll see less than 5 stocks on here. But I mean, there's been days in the last week where I've seen 15 stocks on this list. We do get some OTCs in here like BTCS. I just don't really filter it. But most of the time, because of all these requirements, it's listed stocks. And then the OTC one, I've been playing with this VWAP. It like kind of works, kind of doesn't. It's the same thing. I mean, if you watch Tim Grittani's trading tickers, basically his scanner, I'm just looking for stocks up, trading, having at least 1,000 shares, 1,000 trades, some decent volume, and I don't really like under a penny stock, so I want to see it above 008. And yeah, and then I'll run through and look at these. There was a lot of OTC runners today, so I'm gonna have my hands full going through each of these. I noticed a lot of weed stocks running. Mr. Jack Kellogg was on top of that. Good for him. So those are my main runs. This last scanner, the sub $1 one, is super specific, and yeah, like there's probably one stock on here. Doesn't have the best results. Usually the ones I find work better are from this midday VWAP scan. But basically I just want to see more volume, all the same settings, and then today's volume is 50% more than yesterday's volume, which means like stocks on here are like possible multi-day runners. And this one was a decent run up into the breakout, but totally fell apart. So like this is nothing I ever would have traded. So that one's less useful for me. The midday VWAP and the top OTC percent gainers are definitely my favorite ones. All right, let's see. Give a rundown of your prep. Quality's good. I'd like to think I'm a god. Thanks, Red Wagon Rider. Kyle, I use E-Trade. Really high quality question. Matt, for multi-day breaks, do you count the top wick of the candle or where the candle closed? Yeah, so that's a good one too. Let's see if I can pull up a decent example. BNGO is probably one, actually. I don't remember if it closed at highs though. Yeah, so this one was like, I thought was going to be a big squeezer. It's actually creeping back up after hours. So that's interesting to see what it's going to do tomorrow. It just couldn't get over this $8 level. For me, I always start at the daily chart, but I would never consider either the close price, which in this case, if we zoom in, was like 116, and then the high, which was like 128. I wouldn't off the bat consider either of those the breakout level. What I would have to do is go back in time and see how it traded on that day, and then figure out the most significant level. Because if it was like a quick random short squeeze or just anything, depending how it got to that price is very important. And a lot of times there's more meaningful levels than just the top wick. Like for example, this one, I would say $7 would be the level I was watching here, hands down. Not only is it a whole $0.50 number, what I mean by that is like 50 cents, $1, $2. So $7, like psychologically it's an important level, but it topped out at $7 a couple times in the morning, topped out at $7 in the afternoon, and then clearly, even though it broke above it towards the end of the day, it struggled at $7. So that would be the level I was looking at rather than 728. And assuming this were to break out in the future, looking at that important $7 level would give me, 28 cents better average if I bought into the breakout than if I was playing off the 728 level. And again, like I said, I think $7 level is definitely, using this example, the more important one. So good question. Thoughts on CBDD? Yeah, so that is a low price weed stock, if I remember. And those were definitely getting some momentum. This one, however, as it currently stands, I have basically no interest in compared to like a different one like MCOA, MCOA. You can see the difference in the charts. Just the volume. Today was a huge green day. I mean, this one probably has a decent gap up. Great run. Where if we go back to CBDD, that like it's just not liquid. I do have just a list of weed stocks that I've accumulated over the years. CBDD is on it. So I guess technically I'm watching it, but I really have no interest in buying it until there's a reason for me to buy it. Whether that be volume comes in, there's a news catalyst, I guess it just starts running because the whole sector starts running. But for now, just kind of keep it on my back burner. Thoughts on the SPY? Do we ever go down anymore? Just kidding. So how do you differentiate between small caps that you need to give more time 1 to 2 days and those that you exit quickly? Again, that one's pretty, it's just situational. I don't really have a good example probably that comes to my mind. Oops. But it's all just built into my plan. And each stock's going to have just a different plan based on how it's trading, how volatile it is. Low float, like true, like sub $10 million float stocks are scary, and I'll be tight with those. I'll be quick to take gains, quick to cut losses. Whereas something like SENS was a slower mover. I began trusting the levels because it proved over that period of days that it could hold up, and I let my plan work. It's important to not get in the way of your plan. One of the most difficult parts of trading is just waiting. Like if you think about it, you're waiting actually more than you're trading. You're waiting for your plays to set up. Once you buy, you're waiting for your plays to either work or not work. And then once you get out, you're just waiting again. So once you set a plan, and however that works for you, most of the time I just like have a mental note and I'm like, all right, I'm risking $1. And I will remember it and I'll stick to my plan. If stock's liquid enough, like I'm not scared to put a hard stop in. Hard stop is in like a stop limit order or stop market order. I would never do that on like an OTC stock or a low float NASDAQ, but if I'm trading something, I don't even really have a good example of that one either. Like if for whatever reason I was trading Apple, like that's a time I would be comfortable putting a hard stop in because the liquidity is real. And if my plan works, like I'd want to be stopped out. So stick to your plan. If that means you got to write it down on a piece of paper. Nothing wrong with that. My account is down 300 this week. I brought it up over $1,000. I'm starting to feel doing things. This is after 6 months. Twist. Awesome. Way to go, Jason. Definitely watch Twist. Very proud of that show. Some good guys on there. And we give some really good insight into our trades we've taken basically that day. Totally free podcast on Stocks to Trade Twitter. So make sure you go find that one. Tim spoke of overnight trading being an important tool for growing small accounts. Do you ever hold listed stocks overnight? Yeah, so that one, like, I'm definitely more towards the side of being, all right, let's start that one over. I would say I prefer to be totally flat at the end of the day. Flat as in just no positions, because usually by the end of the trading day, like I'm tired. I just stared at the screens for 10 hours between work and trading, and like for whatever reason, if I make a bad mistake towards the end of the day just because I'm tired, I don't want to hold that overnight and then make it tomorrow's problem. I want tomorrow to start out as a totally fresh day, totally clean slate. Because then I can make better decisions and just have a good day. So, and that's just a personal thing. I mean, swinging stocks overnight like has huge potential. I mean, Sykes has swung OTCs overnight since like I was in the womb, basically. And then Roland grew his account massively back in 2017, swinging listed stocks overnight. It just adds a lot of stress to your day, honestly. Like, and if that's something you're okay with, or just the size you're using, you don't really care. But it definitely extends the work hours because you got to watch it pre-market. What if news comes out? What if there's an offering for listed stocks? That is. Now, if you're in a good listed stock, like fundamentally, and you did, I guess, the fundamental research, you shouldn't necessarily be worried about an offering. But like that's just not my style of trading. OTCs, I used to when I had a really small account, below PDT. Swinging OTCs is like the strategy I used. I didn't have huge success. The market wasn't crazy hot. This is like mid 2019, especially the summer of 2019. And if you trade during that summer, I mean, pretty much every trader can attest to it. That was like the slowest summer we've seen in a long time, August 2019. So like my account didn't grow much, but that was just because of lack of opportunity. And I'm a big believer in like preparation meets opportunity. So even though like the stocks weren't trading at that time, the patterns weren't working, stocks weren't gapping up, it doesn't mean like you should do nothing. Prepare for stocks like CLDW. This is, you know, if you would have studied in August 2019, we are now in January 2021. And I mean, I think the stock has gapped up every single day for like a week. And I can't, it's absolutely crazy. I mean, there's a ton of them. It closes strong and then it just gaps up. So it's a great strategy, especially for OTC stocks that are hot with Catalyst. It's definitely a great way to grow a small account. CLDW is just one of the best recent examples. Where was I? Right here. Can you tell us how you started sizing up? Yeah, and that comes with time and experience and obviously being consistently profitable so your account grows. The best way I've described it to people is you start with like one good trade. And whether it's a winner or a loser, then you move on to 10 good trades. And you just keep those good habits, and then 10 good trades becomes 100 good trades, becomes 1,000 good trades. I don't even know what I'm up to right now. I trade a lot. I think I'm at like 2,600 trades now. Let's go look at my wall. View trades. Yeah, 2,653 trades. And it's just good things keep compounding and building upon each other. So start with that one good trade for sure. And then once you got 100 or maybe 500 good trades and you're consistently profitable and your account size is big enough to justify those losses, maybe consider sizing up. And sizing up doesn't mean like doubling your risk either. Emotionally, I don't think many people can handle that. I couldn't. I mean, I'm sure there's people out there, and good for them. You'll be able to size up quicker than most. But you know, do 20%, 10% bigger, and then do the same process over and over again. It's not going to happen overnight. You're going to be able to size up slowly, the right way. You'll become mentally prepared. But for me, I started sizing up, I think February or March of 2020. So early on, I mean, basically all 2019, I think my risk was at most $50 to $100 on like the best setup. I was willing to risk $100. And then come June, which was at that point in time my best month, I made 94,000 that month. That was peak COVID craziness. I was willing to risk like $500 to $750 a trade, where like now I'll risk $1,000 to $2,000 if it's an A+ trade, like absolutely perfect. I'll risk $2,000, and that's just from sizing up. And it's taken me like a full year to get here. And that's really just the way you gotta do it. You can't rush the process, because if you rush it and then you take a series of bad trades, you're gonna blow up your account. So you gotta do it the smart way, the right way. And yeah, I can't reiterate enough the importance of just doing it slow and making sure, Psych says it all the time, you have to have, like, it's the money in your trading account is money that you can afford to lose, which is easier for some people than others. I mean, I had countless freelance jobs throughout my college career, which is, you know, all the way up till May of 2020 is when I graduated college. But at any point in time, I was not only a college student, I also had 2 to possibly 3 freelance jobs. And that like is how I funded my trading account. I mean, basically how I got to PDT. Most of that money I made from saving just from those freelance jobs that paid for everything. And even to this day, like, I still have a full-time job, and the full-time job I have pays for all my expenses and then some. And then the money in my trading account is just not money I need. So it's money I'm able to risk without much emotion. And that's important, because trading is such a mental game that I think a lot of people underestimate, like, the emotions that you have when you're in a trade, especially if you need the money. So if you're tight on cash, like, I get it. I've been there. Like, go out there, find just some freelance job where you can make $100, and then that way, when you risk $100, like, it's just not money that you needed to pay rent because you put in that extra effort to, have a little cushion. What's a good source for level 2 besides stocks to trade? Yes, I mean, stocks to trade is a good one. I don't really use stocks to trade's level 2 a ton while I'm actively trading because I use eTrade Pro. eTrade's my main broker, to answer Kyle's question from earlier. And they have level 2. I want to say it's like $9 a month or whatever that just gets deducted from your trading account. Very cheap. Yeah, and that's where I trade from. That would be the best recommendation. I mean, it's all preference too. I know there's like wars out there, like Thinkorswim's level 2 is better than eTrade's level 2, like totally preference. I started at eTrade. eTrade was my first $2,000 account, and I've just kind of stuck with it, and I got used to it over the years. So when you talk joint plays, what are a bunch of tickers that come to mind? So UAVS, I'm pretty sure is the leader of this sector currently. And it definitely pulled back. I saw Jack put a comment in chat. That's why Vissel probably didn't work. UAVS, I mean, huge run. That's just every stock I pull up, I feel like is crazy like this. 3 to over 11 today. Vissel, VISL is the next one. I think there's a couple OTCs. It's like Dragonfly, DLFL, DYF. I don't know, it's something like this. Some weird 5-letter ticker, I can't remember, in the OTC market. Yeah, those are probably the best ones that come to mind right off the bat. I'd have to go through a scanner to find some others. Let's see what else we got. If you make your trade plan on previous day's runners and then run the next day pre-market, do you enter pre-market or wait for dips after the market open? 99% of the time, I'll wait for dips after the market open. A lot of the times, especially on like really good breakout charts, in my opinion, if it's like not to the breakout level and then you wake up and it gaps 50%, like it kind of ruins the breakout. It makes it harder to trade. It puts it on more people's radar because it gaps so much. And like most of the time I want to be long a stock before the average traders in it. So that way they run it up through the breakout and I can be selling into them as they chase it through the breakout level and push it to new highs. So if it gaps up huge, makes it pretty tough to trade it. If for some reason it gaps up and pulls back and then sets some clean levels and the liquidity is good, like I will take a trade pre-market. I'm not totally against pre-market trading, just most of the time I prefer to trade during market hours. Sorry, but what is TWIST? Yeah, so TWIST stands for This Week in Stocks to Trade. So let's go to YouTube. Don't mind whatever just popped up, probably some apartment stuff. Stocks to Trade, so yeah, so the January effects is the episode we just launched. TWIST is that acronym, This Week in Stocks to Trade. Steady Trade. This Week in Steady Trade. Man, I'm the host and I didn't even say it right. It's an episode Kyle and I come out with it Kyle, Jack, and I come out with it every single week. I think we have like 33 episodes now. Huge resource. We share our screens. We use stocks to trade. We go over the plays, go over the charts. If you're not watching TWIST, you should be watching TWIST. That's my opinion. Missing the plays at the right time. Yeah, so, I mean, that missing plays, like, you're never going to be able to nail every play. Even the best traders will miss trades. You just can't be everywhere at once. You can't time everything right, and that's, like, the beauty of trading. You're going to miss stuff. I miss stuff all the time, and it sucks. You just got to learn that, and again, we're fortunate enough to be in such a hot market where like I can say stuff like this, like if you miss a play, it's really okay. Like it might be 15 minutes, it might be an hour, it might be a day later, but there will be another play. You go back to 2019, like you miss a play, there might not be a play for a week or two. So right now, there's just so many plays to learn from. If you miss one, learn from it. Was your plan right that you outlined maybe on your watch list and you just missed the execution? Well, good, you had the right idea. But otherwise, some things that I do just to make sure I catch plays, I set price alerts. You can do that. Stocks to trade, Thinkorswim, pretty sure you can do it E-Trade. Just like at a key level or right before a key level, say there's a breakout at $1, you can set a price alert at like 98 cents. So then that way when the stock goes close to 98 cents, you get a little alert either on your phone, on your trading platform, like, hey, just so you know, the stock traded above 98 cents. And then you can hop over, take a look at it, and hopefully you don't miss that $1 breakout. The other thing would definitely be to just try to figure out what you think. And again, you'll be more right about this over time. What you think are the highest odds plays that are going to work. Because if you have the highest odd play on your screen, you're not going to miss it. Where if you're off watching some play that really is like low chances of working, you're basically just watching a play that's not going to work, and you're going to miss the play that you should have been watching. All right, you're most likely going long. Can you explain some of your thoughts when you're making a watch list? And how you're actually deciding to buy before entering a stock? Or the key catalysts, breakout, because most of them fail. Yeah, breakouts fail all the time. And if you're just totally blindly like buying breakouts, like I think Gertani tracked this and he put it on Twitter. It's a losing strategy. It's not going to work. But breakouts are hot right now if you play them right, because like everything is running. I mean, the crappiest stocks ever are just continue to run. So there's breakouts galore. But I think what you need to do is figure out, like, again, which ones are most likely going to work. And that comes from like just making a plan, and then like you have a check. Sykes actually has, I think it's a Sykes sliding scale, he calls it. I believe you can actually go on Profitly, and it's Profitly / like SSS. Yeah, I remember this bad boy. And these are some great, prepares the acronym. And like, these are honestly everything you should be looking for. Price pattern, is it your price, your pattern? Like, boom, 20. And like, you can go through this for each ticker. Like say your ticker is SENS and then Vissel. Like I might like the SENS price, and like you literally use this tool to figure it out. If you need to, go through this one by one, so that way you can figure out which one has the best chance. Because like reasons like catalysts, market environment, like what time of day is it? Does it work for you? Because obviously everyone's got a different schedule, and that's what comes into like catching a breakout play and then seeing if a breakout play works. The other side of this coin, I think, is just making sure you're looking at the right stocks in the first place. That's why I love this afternoon scanner that I have so much, the midday VWAP hold, because simply the fact if it's able to hold up into the afternoon, it's already got a higher chance of breaking out. I can't, like, in the morning, I guarantee if you run a highest top percent gainer, you're gonna have 100 stocks any given morning that are up over 10% on the day, because we're in a crazy market. And then you run my scanner in the afternoon, you're gonna have 10 results. So like, boom, 90% of the stocks that failed to break out are already out of the picture for me. So I don't even have to waste my time. I can just focus on these 10 that already have a great chance of breaking out. And then I go through, is there a catalyst? How good of a breakout is it? Because like I was going over Vissel, again, disappointed this one didn't work, is what it is. But like this is a very A+ breakout. The volume was higher than any time before. There's no resistance up till 4, versus something, I gotta find one, probably Check's a decent one, I think. Like there's resistance overhead, and I think this one's run a couple times. Yeah, like there's resistance back here, there's resistance here, like there's just a lot of resistance. It's just not nearly as clean. So Vissel I liked a lot. I thought I had a good chance of running. The float in Vissel I think is a little higher. Oh no, it's 20 million float. Market cap's good. So like I don't regret that trade. I would take that trade again tomorrow. That's kind of my thought process on it. Pretty sure I hit most of the points in that question. How do you watch so many tickers? Watch them. Make sure you're watching them at the right time. I mean, again, you got to figure out which ones are the highest odds. But on top of that, you can do other things like I would recommend everyone like having two screens is huge. My original setup before I had four screens, and again, I work, so like a screen or two is used for my job, which most of the time I'm able to do remotely. But then the other two, sometimes three screens, like I'm able to watch more charts and I can just scan over the screen. When I have to trade from a laptop, it is more difficult. But if you're able to narrow it down to your favorite setups, then you're able to watch the right ones. Also, I guess if you have like super good vision, you can, on like platforms like Thinkorswim, put up like 12 charts on your little laptop screen. They're just like super tiny. So you could do that too, just so that way you're able to see them all. Do I check news, SEC filings before I trade the ticker? I will check news just to see if there is news or what kind of news is. Again, I don't really care what it is. If the market's reacting to it, that's enough for me. But like certain news, like I mentioned, SENS, they mentioned Pfizer in their headline, which is huge because anytime a small, crappy penny stock mentions a large Pfizer, what's Pfizer P? Like Pfizer, let's go look, is a $200 billion market cap. Absolutely huge. They're making the vaccine, the COVID-19 vaccine, and then you have SENS, which is currently only a $300 million market cap. It was like 200 million, probably even less than that. It was probably under 100 million when they PR'd that. So like it gets people's attention because they're like, oh, Pfizer's working on, like, it just gives it the story some legitimacy and increases the chances that it's going to run, just because the news is more reputable than something just super fluffy like, oh, like we made our website today. I think I saw that this morning, like some company PR'd that they made their website. Like that's useless to me, but if the stock is running, that's all I need to see. Can I run through my pre-flight checklist? Monaco sliding scale, if I will. Yeah, so usually I basically find all my stocks from scanners, whether it's the day before or the night before. So if I run a stock, I run my scanner, and then I see something like PEC. PEC, I have some inside baseball knowledge already. Like this is a energy company. It's running with all the other energy companies because EVs, electric vehicle stocks are running, like just the whole sector is super hot. Probably because Biden's going to be president and he's considered more, green energy friendly and all those things. So like there probably is going to be some stimulus or tax credits or something. I don't know what investors are thinking. Again, it doesn't really matter. Stock's running, period. That's all I really care about. If it's on my scanner, I have some interest in it. And then I'll pull it up. I'll look at the daily chart. Something like PEC, actually, it's higher priced, so it wasn't perfect for me. But like, ignore this history, doesn't matter. If you look, there was like a clear breakout at like 1450. I'm looking at these two peaks here, and then even if you go back to the last 2 months, like 1450, where was that? In here where it topped out a couple times, and then actually it looks like 16 became a pretty important level, which if we go the last 10 days and look at that, 16 topped out a bunch of times. Yep. So this one, if it wasn't so high priced, I probably would have given it some more attention. Meets all my criteria there. It's a breakout. I like stocks that are near breakouts because they have better chances of running. This one I know is in a hot sector, which is a catalyst in itself. I want it to be in the right price range, so that's why PEC just didn't meet the cut for me. And yeah, like things like float and market cap, I don't think about because just the way my scanner works and the settings on it, like I'm not going to see a stock with a high float on those settings. And I recommend everyone does that, whether you like my scanner settings or you've got some variation of your own. Like Stuff like market cap and float, like just make your life easier so you don't even have to check it. Like if don't let your scanner even show it to you. Um, so that's what I like to see. Next, I want to make sure it's just got decent volume. Would probably be on the next thing. Impact, clearly, I'm not sure what happened this day. So before I traded it, if I was to trade it, I would definitely look because there's just some crazy volume on this day. And then enough volume. In comparison, it doesn't look like a lot, but it's enough to get me to trade it. And then I would go just look at the price action. Is it choppy? Does it trend well? If this stock's going to break out, like, is it going to pull back on me and go to stop me out before it actually works? Those are the things I'm looking for. SEC filings, I don't check them because, and again, I think that goes back to the mindset. Like I rarely swing stocks, very rarely. I like to be no positions going the day so I can sleep. Because I mean, trading's stressful. Anyone who tells you it's not, they're lying to you. So I think I nailed everything on those. And then if it meets the cut, I'll add it to my watch list and I'll throw it on one of my screens, one of my charts, and I'll wait for it to form some decent pattern out there. So that way I have a good risk reward and I can enter it. I choose CNET DPW this morning. All them big percent gainers, big volume, previous runners, good indicators, dipping their pattern. And all failed. So what are your thoughts? All right, so that's a bunch. Let's look at DPW. Again, over time, you're just going to start remembering tickers. Same crappy tickers run all the time, and DPW is one of these crappy tickers. So if you didn't know that, like a good way to look is pull up like a 10. I just randomly clicked 4 years because it's enough, but pull up a chart of like 5 to 10 years. Like, and if you see a stock like with thousands of dollars, or I mean, there's some probably like FCell or CEI. FCell has been running pretty decently though. Yeah, like CEI, millions. And when you see that, like, you should know it's a crappy company. They've done reverse splits. The stock was not trading in the millions of dollars. They've just done so many reverse splits, probably because they're so super dilutive. They're going to dump on you. And DPW is one in that category. It's a crappy company. They were a Bitcoiner back in 2018 during all this madness. Pretty sure they're claiming their electric vehicles this year. So just off the bat, like, I already know, like, this is a stock that sucks. Like, I really don't want to be in it. And that's just something you learn with time, and just seeing it enough times. And there's no way around that. Again, I told you you could kind of cheat looking back at 5-10 years, but the best way to do it is just being in the game long enough, not rushing stuff. So then that way, like, I've seen DPW run like 5 times in my 3, almost 4 years now of trading. And I just know, like, it runs and it fails. In this specific situation, the reason, on top of it just not being the best ticker, you can see there's probably a ton of resistance back here, because it spiked, failed, and spiked again today, even though the volume was great. If you look in comparison, like the volume here, there's just, I guarantee there's still people in their Robinhood accounts or wherever they are holding on to this stock, and the moment they saw it perk up, they just try to get out, break even. And that's what happened in this situation. Now, if DPW, like, for whatever reason, hypothetically, it holds up for like a month or 2, or maybe 3, and like over that time is able to work out all those bag holders that are stuck back here, and then like perks and breaks out through 10. Now this, I can almost guarantee you, is not going to happen. But if it did, then the situation might be different, because like FCell a year ago was like one of the crappiest companies in the entire stock market. Like, you can see it. This didn't trade near the hundreds. I bet you if we go back further, yeah, see, just dilutive, crappy company. But in the last 6 months, probably even a year, in the last year, they stopped diluting, which does happen. They turn their business around. They're involved in energy, electric vehicles. They're in the right sector at the right time. And when the company stops their dilution, its stocks run FSL is a great example. DRYS, Dries, if you've watched any old video lessons, it probably gets mentioned all the time, is another good example. That one went from like $5 to 100 in a day when they just like stopped diluting, because like short sellers like to short these dilutive stocks because fundamentally it's in their favor, and when that changes, you get some really powerful runs. That doesn't mean you should try to buy these stocks because they are crappy, but in the rare occasions when something shifts like that, you get some good runs. FSL, one of those examples. What do I consider a low float? So, I mean, anything honestly like under 50 million, like I consider low enough float, low enough for me to trade, low enough that I think it's going to move. Will I trade stocks over 50 million float? For sure. I just have to adjust my expectations. I know they're going to move slower. So anything under 5 million, like when you get under the 1 million specifically range, like I won't touch that with a 10-foot pole. Those are your crazy runners that halt all the time. People make a ton of money because they get lucky, in my opinion. But then they ultimately always dump. They're scary. And for me, they just like don't follow any patterns. So I'm not going to trade those stocks when they're just not easy. There's easier plays out there than trying to wrestle with on sub 1 million float stock. What advice would you give yourself if you were a relative newbie trader and you're starting your trading journey in this hot market? Whatever time you can dedicate to the market, like max it out totally. If you got a full-time job, you're a parent with kids, college student, and you can only give an hour, like honestly an hour, because you're just so busy with other life stuff, dedicate the whole hour. Because while your journey to success is probably going to be longer than most because you're only able to give up an hour a day, like learn as much as you can. Now on the flip side, if like you just got a ton of free time on your hand, like use all of it. Roland Wolf famously studied 17 hours a day when he was a new trader, like didn't sleep, and he was a father at the time. Didn't sleep, was probably studying with his kids in his lap. Like he was studying as much as he could, and he was studying at the right time, and because of that he was able to capitalize on the next hot market, which was the Bitcoin market. So his timing was really good, but honestly he was just super prepared because he studied for so long, and then his preparation, like he was able to capitalize on that opportunity. So I don't know how long this hot market's going to last. Like it could end next week, it could end in a year, but learn as much as you can now, because yeah, like why not? Like, don't you want to be prepared for the next run? That'd be my best advice. Journal everything, and journal can be different for every person. It depends how you learn. Like you literally type or you write in a journal, awesome. For me, what I did, I still have it somewhere. I have a fat, like probably 3-4 inch binder of printed out charts. I don't even want to know how much ink I wasted. Oh, I didn't waste it. Let me be very clear, because I think that's a big reason why I'm here now. But like I would print out the charts, I would draw lines on the charts, I would write notes on the charts, and over time I would throw away the ones that were like average or just blah, even though at the time I thought they were good. And so like my stack of charts I have now are like best of the best charts over like the last like 2 years, with like clear resistance lines drawn on them. I would like sit there and like do math on them, being like, oh, if I would have risked here, how many shares could have I had, at which point could I add? And I would just flip through the charts, and that's how I learned best. I'd consider myself a pretty visual learner, so just being able to draw on all the charts was huge for me. Trip, why do I eat grapes like a princess? I was duped into that by Sykes. He told me it would be a good photo, and now it haunts me forever. No. Yeah, I look pretty cute in it though, so you can tell your friend that I look pretty cute. Thanks for the webinar. I would like to know how you focus and prioritize your watch list tickers. Do you set alerts? I do set alerts. I think that's super important. Breakout alerts, maybe dip buy alerts, whatever for your type of trading, just so that way if you're not watching a stock, even if you're watching it, like better be safe than sorry. Have an alert so that way you can just always see a stock. And then how do I prioritize them? Most of the time it comes down to like catalyst, volume, chart, which I've said a couple times, but those are definitely the key ones. And whatever one has maybe the best volume, the best catalyst, the best chart, or even which one I think can run the furthest, which like is something, if you're a long bias trader, you should take into consideration. Like if a stock can only run 10 cents, is it really worth it to risk 10 cents to make 10 cents? In my opinion, no. But if you're like, man, a stock can run $5 a share, like it has a possibility, and you're like, I don't know if I want to risk 50 cents a share, because that's the only reasonable risk level. Like if the possibility of it still running 10 times your risk level, like that's something you should definitely get in. Got a little off topic there, but I mean, that's something I always take into consideration, is just how far do I think a stock can run. And honestly, like a lot of times I've just underestimated them. I usually sell too early. BNGO, I had like a bunch of shares of that under $1, and I sold it like $1.10. I did with BIOL the other day. I sell them early all the time, and they run a long ways, but it's part of the game. What's the biggest challenge you had to overcome to become profitable? For me, for whatever reason, getting over the PDT was huge. And while that's kind of when my success started, I think it was a combination of a lot of things. Don't get me wrong, I don't think there's a trader out there that likes the PDT rule. But the lessons you can learn while you're under the PDT rule are huge for your trading. How to be patient, how to only take the best setups, because you can only trade 3 times a week. Those are lessons you would never be able to learn if you were over PDT. And honestly, like you learn to appreciate it if you have to grind and hustle and like try to figure out how to get over PDT. Because I was in like PDT jail for like a little over 2 years before I was just able to save up enough money from my side hustles and my internship I had in 2019. Where like once I was over PDT, I was like, there is no way I'm going back under PDT from taking just dumb trades. So like the lessons I learned because of that stuck with me. But for my trading style, once I was over PDT, I was able to, trade differently. There wasn't just that constant thought in my head of like, oh, if I sell this trade for a loss, like this is the only trade I'm able to take. I don't want it to be a loser, and then it becomes a bigger loser. Like those are like, I'm not gonna try to hide them. Like those are mistakes I made all the time when I was under PDT. So getting to PDT was huge, and the biggest challenge I had to overcome, because it took me so long. It took me over 2 years to get over PDT, and then last year I glue up. I still haven't finished all the totals, but like 600,000. I got over PDT in September 2019, and then 2020, just being prepared and all the market that we saw. Like, I love the people on Twitter that are like, oh, it's just the market. Well, yeah, no shit, it's just the market. Like there's a ton of opportunities. I'm not dumb to that. But like I was prepared to capitalize on them. And if you're not prepared now, like, does it suck? And yeah, but make sure you're prepared for the next time, or make sure you're prepared for tomorrow, because there's going to be another one. Even if what happened to the .com bubble happens again and there's like a 2-3 year dry period, God forbid that happens. But if it does, like, be prepared, because the market came back and we're seeing some of the craziest plays like I've ever possibly imagined. How do I determine a risk on NASDAQ? I find they're messy around key levels. It's true. NASDAQs are choppier. They're not as clean as OTCs. But one thing I do, we're just going to pull up Sens and look at today's chart, is after like 11 a.m. Eastern, so an hour and a half into the market, I switch from a 1-minute chart to a 5-minute chart, and that helps me eliminate some of the noise and really start seeing some key levels. And if for whatever reason the stock's super choppy, like there's times I'll go to a 15-minute chart because it just cleans it up, cleans out the noise, and then you're able to actually really see those key levels. So that's how I would find the key levels to risk off of. And then usually if I'm, most of my trades are breakouts, so there's like a trigger, a buy trigger over the breakout level that I'm looking at. So I know if I have to buy into strength, I can buy hypothetically 1,000 shares versus if I can buy a dip, I'm willing to size up and get some more shares and just risk off the same key level. The important thing is it's always the same dollar amount, because if you can become a consistent loser, you can become a consistent winner. Because I think the biggest thing people struggle with is just the big losses. It's what I struggled with. That's another one I can add, some things I'd overcome. Like if you're one of those people out there who takes single after single after single, and then you take a huge loss that wipes out a week or a month's worth of gains, like that's what's stopping you from being consistently profitable. I promise you. Like, because if that loss was a normal loss, you would still be up a month of those gains that you gave back. So if you're able to become a consistent loser by risking the same amount and making sure your losses are more or less the same every time, it's going to help you become a consistent winner. When trading a foreign company, is the daily volume traded our ADS? Honestly, I don't know. I wouldn't take that into consideration, but FRSX was another really good trade the other day. I missed it during the small cap rockets, the open hours. Someone brought it up and I was kicking myself all day. I forget who it was, but absolutely beautiful breakout and then day pattern here. We'll get rid of the news notifications into the afternoon. And then like, even if I would have chased it up to 530, which was the morning high, we ran up to 790. Yeah, small cap rockets, I've mentioned that a couple times. It's right within stocks trade. So if you have it, you have breaking news, maybe you're in the pro chat. There's small cap rockets. It's me and Bowen. People can come in, ask us, me, Bowen, and John Papa, sorry. That can come in, ask us questions. We keep it open only for an hour a day, so that way it stays super clean. Right now it's 12 to 1 Eastern that it is open for questions. I make sure to go through, answer any questions, any stocks you want me to take a look at, give my opinion. But most of the time it's just John Papa, Bowen, and I alerting some stocks. So like I had some trades today, CPSH, took it over 10. I bailed it for a quick gain, and that one ended up working. That was one of those lower float ones I just didn't fully trust. It was choppy. It looks like, so I took it over 10 here, and I sold it into this push, actually 10.20. So I sold it here. And I mean, my gut was right. It pulled back. I 100% would have got stopped out on this for a loss before it ran up. But when you're in these lower float NASDAQ stocks, like this is the action you get, and I'm not a fan of. And then the other one was BTSC, and I was just talking about how I trade it in sympathy to BTCS. So yeah, that's small cap rockets. I'm sure someone can drop a link in the chat. It's within stocks trade, super convenient. If you already have breaking news, like it's literally right there. How I organize my watches on stocks to trade. I actually don't keep them on stocks to trade just because I don't trade off the platform. I know you can, but again, it just comes down to like, what am I familiar with? Like, why does Tim Gertani use, I think Equity Feed it's called? Probably because back in like 2011 when he got started, stocks trade didn't exist. Like you just get comfortable with certain things. So I use eTrade Pro, keep my watch list on eTrade Pro. I have a main watch list, which is just a jumble of stuff, and right now is way too long, so I need to go through it. And then I have like sector watch lists. So I have like a weed sector watch list, Bitcoin, electric vehicles, mushrooms, like any sector, drones, any sector that's been running. I just make a watch list for it, and just as more tickers come up or I find more tickers, I'll just throw them on the watch list, so that way I can have a list. And like I've had those for like 2 years. And they just keep growing as more stocks come into those sectors. How important is float to you? Kind of already answered that, but just to recap, under like a 5 million float, I'm not super comfortable with. start getting that choppy action. So like I guess I would say like 5-ish to like 50 million shares is like the ideal range. Over that, the range and the moves are slower, and I don't have the best patience. Can I flip back to the OTC scan? Yeah, I'll go real quick. Super basic. Again, this VWAP thing I've been playing around with the last couple of days as we've had some hot OTC runners. Nothing crazy. I think it only gives me a couple more results. That was 26 versus, 55. I guess it's actually doing something. But it's the same concept where like these should be the stocks that are near their highs versus just your random OTC stock that's got a bunch of volume. So to go through it one more time, just OTC market. I only want to see OTC stocks. This is probably a little low, 2%. I could probably bump that up to 10%. I want to see more than 1,000 trades, more than 300,000 volume. I don't like under a penny, so I look for over 008. And this first 4-5 blocks is literally straight out of Tim Gertai's Trading Tickers DVD. Like, it's just his basic top percent gainer OTC scan. And then this little part here, where I just want to see the last price is above VWAP by like 2%. 2% is just an arbitrary number. Again, I've been playing around with it. But it gives me stocks that at the time of it close at least were above their VWAP and we're trading some decent volume. So like MJNA. So let's leave that. Oh, that's the chat here. Take a screenshot real quick. And then let's move on. Any best free scans for OTCs? I actually don't know of like a good free OTC scanner. I could totally be wrong. There's some free scans out there for NASDAQs, but for OTCs, I think you gotta pay for them. It's a very unique market, super inefficient, and I mean, honestly, that's why there's so much opportunity there. Can you talk about the OT swizzle and how you build your watch list? So the OT swizzle, when I first started finding some consistency was back when I did a podcast called Beyond the PDT, which, to my knowledge, unless my friend took it down, is still on YouTube. It is. So we did 23 episodes, and episode number 8, by the way, Jack Kellogg is on here, and so is Kyle a year ago. So if you want to see Jack Kellogg back when he was like little baby, and Kyle when he was like little baby, you can see where they were at a year ago. Even Dan Irish, who's killing it. Yeah, there's some good traders on here. But Dom doesn't like the spotlight. Great kid. Jack lived with him in Michigan for a year back in 2019. So the OT Swizzle name comes from Dom. He's a funny kid. Let's OT Swizzle is the name of this episode. Just go into YouTube, type in Beyond the PDT, and it'll come right up. That is his, like, more or less his strategy and it works very well in the OTC market when OTC market is running, which is key, obviously, because the OTC market is very hot and cold. I think MITI was a decent example, not the best. This one's close. It's not picture perfect on BTSC. Essentially, it's the same pattern I'm looking for on listed stocks, but it's more specific because the OTC market is more unique and you can get these really, really tight ranges. So again, this one's not super great. Maybe BTCS was a little better. Yeah, this one's a little better. But basically it's a morning spike, and then instead of something like FRSX where you get these bigger ranges and the bigger trends, OTC stocks will get really tight in these tight ranges. So it became clear $3 on BTCS was a trigger, a buy trigger level, a key level to buy over. And then it started messing around, and as you can see, it chopped around a bit, and then as we got closer in the afternoon, it started getting tighter. Um, and why the OTC market's so awesome is the level 2 like is much easier to read than the NASDAQ. So you can see like, oh, whatever this was, $2.89. Probably at the time there was some solid bidders down here at $2.89. So like you can buy into the levels, risking those bidders. Like hypothetically, say there's a million share bidder down there. I mentioned today on BTSC there's a million share ask, and that's something you can see like at $3 as the ask gets chipped away. Since it's a little slower because it's the OTC market, you can see it and you can act on it. You can buy over that. Basically, it's just an afternoon breakout strategy, but the swizzle part gives you a very tight risk level, and it's big for small accounts because like it's one of the most unique opportunities in the market where you can get like a 5 times return on your risk, which is how you're going to be able to grow a small account exponentially. But then it kind of plateaus like as you get a bigger account, because like the OTC market, you're limited with the size you can take. But if you have a small account, like especially probably under like $50,000, like, which isn't small, but up to $50,000, like you can trade these stocks and have almost no liquidity issues or even really have to think about them. So that's a great pattern. A little more unique than Sykes's, which are like dip buys, and then he likes to buy them in the afternoon for gappers. A lot of times, like even before the gapper, like if it would have happened, like you're able to get in earlier just because you're looking at the stock earlier in the day. So definitely watch that episode. We also talk about it on Twist, which I've mentioned a couple times. Where were we? OT Swizzle, there we are. When a multi-day runner holds and consolidates in tight range for a few days, do you like to add up anticipating a second move? I do, if the catalyst is there. If I can't find a reason for why the stock's up, it's not something I will try to anticipate or gamble on. I will just wait for the breakout. But if there's a good catalyst, I keep going back to Sens because that's the most recent example. I will, because the catalyst is there giving me some extra conviction, and I'll just risk the lows. And if it fails, it fails. Is what it is. That's trading for you. You're going to have a lot of losing trades. If you could go back in time and shorten your learning curve, what would you say? So I said some things already before I got to this question, but yeah, that's a tough one on top of what I already said. It would be learn everything, but I'll expand on that because I know I already said that. When I was just finding consistency, it was in the OTC market, playing like the OTC swizzle. And that's how I was able to make any money in 2019. But because of that, I was like so blindsided or so tunnel visioned that like that's all I looked for, that's all I traded. I was like totally fully invested in figuring out mastering the OT swizzle, which is great. When you have a small account, like you don't have a ton of opportunities to trade a lot of stuff. You have to battle PDT. You don't have just the funds to buy a lot of stocks. So like you should master one thing. So I don't really regret that. But then at the same time, because I was just so invested in that, in 2019, there wasn't a ton of OTC stocks running, especially in the second half of 2019. That like the transition for me from like end of 2019 to beginning of 2020 was kind of tough because I just wasn't super familiar with listed stocks because I just didn't even look at them. So don't be blind, or don't like turn away or any of those things from just a different strategy. I would say learn as much as you can. It doesn't mean you have to trade it. It doesn't mean you should do something away from what's working for you. But keep learning, because the market will change. What's working today is not going to work in a couple months. And the traders that are super consistent for years and years and years, not only like a year like me or a couple months, are the ones that have a lot of strategies. They understand, they've learned them, it's in their playbook, so they're able to bounce from strategy to strategy and just play different stocks. So yeah, so to summarize, like if you got a small account, learn one thing first for sure, and Then if you learn it and the plays aren't there, like start dabbling other places. One thing I've been trying to do for months is just really learn how to short. And we got great resources, ton of great short sellers in these rooms. But like I'm just so long biased and 99% of my profits are long. I'm gonna need to learn to short because when these stocks stop running, which they will, I'm gonna need to know how to short them. Um, yeah, so it's something I need to work on. Just there's so many runners every single day. It's kind of a lame excuse now that I'm saying it out loud, but that's what I'd say. And I tweeted that the other day. Just learn everything, and when you're actually trading, filter out the noise, focus on you. Then after market hours, learn something new. Do I ever trade warrants? No, but there's some crazy moves in warrant stocks. I don't understand them. We'll add that to our list of things I should learn. Can you speak of float and how you use it to determine demand? Yeah, so float, super basic. It's the number of freely tradable shares. It's different than outstanding shares because outstanding shares factors in like insiders or insiders basically. People like they're locked up for whatever reason, so they can't be traded. So the float is the actual number of freely tradable shares. And how do I use it to determine demand? Basically, it's more like determining supply than demand. If you know how much supply is out there, you know how fast it's going to move. That's why low floats move more. There's less supply. That's some basic economics right there. So it takes less demand to move less supply versus if a float is huge, aka the supply is huge, you're going to need a lot more demand to get that thing moving. Swing stocks from the womb. Got it. Yeah, if only I could trade stocks back in those days. Having trouble with so many plays in OTC and listed. Chat also overloads the runners. Any thought on how to handle this crazy market? Focus on, again, some people really like OTC stocks. I think it's a great opportunity. I think everyone should learn them, but some people just don't understand them. They can't figure them out. That's fine. If you suck at them, you suck at them. Move on. So figure out what works for you and then just focus. The easiest divide is definitely OTC versus listed. And I know the chat throws a lot of tickers in there, but just like pull it up quickly. Like if I see a ticker in chat, I can pull it up and in 5 seconds, I can tell you if I want to watch it or if I don't want to watch it. Like Pola, PPSI right above this. I'll just pull up Pola. I looked at it earlier today. Dang, it's running after hours, probably with all the other energies. Like this is something I'm going to put on my watch list and I'm going to watch because it's a breakout, it's an energy stock, it's moving after hours. It's going to be interesting to see where this goes tomorrow. Now that comes with experience for sure. So my 5 seconds might be your minute, but if it only takes you a minute to find a stock and that way you don't have a screener or you might have missed a move, it's fine. Look at every stock and there's a lot of repeats. So if there's a repeat and you already looked at it, skip over it. But the chat room's a great resource. I wouldn't try to filter it in any way. Besides, like, just because a ticker comes up in chat doesn't mean you have to trade it. So you have to have the discipline to know what's good for you. Good place to find real-time level 2 data. E-Trade doesn't seem to offer it. They definitely do offer it. I would chat with them, call them, or use their online chat. You might just have to turn on some setting. I'm not Twitter savvy. How do we find stocks to trade twist? And what does, come on, please. Yeah, so I'm sure someone can link it for you. We'll just throw it in the chat, or I'll throw it in when we're done. Just a recent episode of Twist. How many trades a day on average? Recently, a lot. I'd say it's 5 to 10. But again, we're in unprecedented times. Absolutely crazy market. So because of that, definitely trading a lot more than I normally do. But back in 2019, like when I had small account, for sure, like 1 a day, maybe. Maybe more as my account got bigger. It all depends on your account size, and there's some tricks in case you aren't aware. If you're under PDT, how to get around it. around it, kind of. You can use a cash account, which you actually can trade as many times as you want with the cash account. You just then have to wait for that cash to settle. So if you say you have a $10,000 account, um, it takes 2 days to settle. So on today, I could use $5,000 of it. Tomorrow, I could use the other $5,000 of it, and then Monday, I would have $5,000 again. So, like, if you're good at budgeting like that, you are able to trade every single day. You just have a limited budget, basically, of stocks you can use. And that's something I did once my account was around like 15,000 or so. That's one way. The other way is just use multiple brokers, which essentially does the same thing. You just have to split it up and learn a bunch of different platforms, which sucks, but it's the name of the game. And until you get to PDT, which is a tough road, trust me, it's just what you gotta do. I tried a few trades on OTCs using E-Trade, but the commissions don't really allow for much testing. Have you success using Fidelity? They have 0 commissions on OTC trades. Yeah, so OTCs, another reason they're so unique is even though trading is commission free, OTCs you still have to pay for on most brokers. It looks like Fidelity, I'm pretty sure Charles Schwab. Also, you do not have to pay commission on OTC stocks, which is good. But I've heard, not from personal experience, that just like the fills on those brokers are much worse. And I mean, basically, you get what you pay for. So like, yeah, I pay commissions for OTC stocks on E-Trade, but my fills are, in my opinion, pretty good. Like, I don't get filled every time, but like, that's the game you're playing with OTC stocks. Like, you're not gonna get filled every time. What's my full-time job? I don't really know what to describe myself. Like, probably senior marketer, I guess, would be my job. I work for marketing firms, but like, yeah, I didn't. 2020 was a wild year in many ways. Graduated college, I have a software engineering degree, but once I discovered trading and through just my freelance jobs I had and the experience I developed, like, I was like, I don't really want to be a software engineer. I know that happens to a lot of people, but I didn't decide to follow that route. In 2020, like, I'm not going anywhere at my job. I like my job. I have this fear, and who knows what's going to happen, that the market just one day, like, who knows, like, I'm still super, super new to this consistency thing. I consider myself a pretty new trader. I still have a ton to learn. So if one day the market, like, I can't make money anymore, it's nice to just have a backup plan. And like with anything, it's just nice to have multiple streams of income if you can do it, if you have the time. And that's just like something I've always done since like high school. I've always had a job or two and then a side hustle on the side, to just build a big safety net, basically. Because if whatever one stream of income disappears, you're kind of stuck, and that's not a situation I personally want to be in. So yeah, and I know trading with a job is tough. It's tougher for some jobs than others. The remote work in 2020 was a blessing. It allowed me to trade all the time. So I'm still basically work remotely most of the time. COVID's tough. I know if you've got like a, factory job or just a job you can't be in front of the computers, like, it's tough to be trading. It doesn't mean you can't trade. Just find a strategy that works. Like, there's swing trading strategies out there. You can always find an excuse, but like, don't make an excuse. Just, if you want something, figure it out. There's always an answer. I've not used the E-Trade strategy scanner. Not really sure what that is. Sounds kind of cool. How much did you start with, and how long did it take you to become consistently profitable? So I joined the challenge 2017. Kind of went all in. I could afford it at the time, so I joined the challenge, which is an investment in itself, but very glad. Resources unparalleled. It's got everything I needed. I've watched all the DVDs. Trading Tickers, I guarantee you I've watched 20 to 25 times, and that's a thick DVD. So like, if you haven't watched it that many times, you better start watching it some more, because that thing is gold. But I started 2017. I joined the challenge. That was after my freshman year of college. I had an internship lined up. I was like, nope, don't want to do this. I'm going to be a full-time stock trader and I'll figure it out that summer. That did not happen. I had about $2,000 I put into my trading account, which I saved. I was at the time, my main source of income was I was like a caddy, like cart cleaner at a golf course. So that's what I did. So super chill job. So I was able to save up some money. Those 3 months, I treated it like a full-time job. I spent the entire summer learning as much as I could, trying to figure it out. That's when Roland Wolf was coming up, and like I aspired to be him. I was trying to, like, I've got notes. I guarantee I got pages and pages of notes about Roland Wolf and what he was doing and the strategies he was doing, because he was killing it in 2017. Learned everything I could, and basically, yeah, didn't become a full-time day trader in those 3 months. It's a little tougher than he thought. Blew up half my account. I count as a blow up because at that time I took my money out and I was like, man, like that sucks. I just lost $1,000. Then into the fall, I kept just doing my side hustles, growing my account. And then the way my software degree works is I had to like have a full-time internship. And when you're working full-time, it's tough to trade during the market. Super thankful for those internships I had the beginning of 2019 because I was paid well, especially for an intern, and it allowed me to save enough money to get to PDT. I just put all the money in E-Trade, so I was able to get over PDT, and I wasn't consistently profitable until 2019. So 2 years in, and that's like baby profitable, baby consistently profitable. Like my biggest month, 2019, I think was like $2,000 or $3,000 total, and it's just really gone exponential since then. Why do I still work a full-time job if I'm successful? I just described it. Like, let's be honest, like I'm 23. Like I got a long life to live. So I don't want, I had a great year, but that doesn't mean I'm gonna have a great year in 2021. I had a good start, but doesn't mean the rest of the year is gonna go well, or 2022. Like I don't know what the future holds. So holding on to the job, trying to also, make other streams of income, just so then that way, like maybe one day, who knows, like I could possibly be, I guess, just a trader, but for the foreseeable future, keeping the job, as many streams of income as you can. It's kind of my motto. Twist has helped me so much. That's awesome. Again, Twist, watch it. Great stuff. Am I on the Steady Trade team? Technically, I don't think I am. I don't know. I call myself on the Steady Trade team, self-proclaimed, because Small Cap Rockets is a part of the Steady Trade team. Definitely check it out. But I'm not in like I am in the Steady Trade team chat. I don't really participate much in there, but I am a part of that. What factors do I take in consideration when holding a stock after a bounce? Let's look at one today. OZSC was one, and I was in it, and I did not do a very good job at it. So this is actually like the first good panic we've had in some time, in my opinion, because we get these like really choppy ones, and that's what we've been seeing for like a month, and it's really annoying. But this one was some good panic, some good volume came in. I got in at 3.2, and I got out at like 3.31 or something terrible. So I got a really small part of this bounce because for me, there's so much volume coming in. I like to see the bottom candle like have the most volume. That's usually an indicator. But then on this candle, I think around 3.3, there was some big size, and he kept soaking shares and soaking shares, and I was like, oh my God, like we're gonna go lower. So I kind of panicked out, which wasn't the best move, obviously, because we ended up getting a pretty solid balance, like 30%, 25-30% here. But for me, like once the bottom's in, and I can see that in the level 2 turn, the way the tape speeds up, the size I start seeing on the bid, and the ask slowly getting smaller. All those factors come in, and once the bottom's in, I want it to be the bottom, period. The best ones, or the ones I'm usually the best on, are like we skip like 10% up, and then we just slowly trend up since then. If it starts holding near the bottom for too long, I get nervous. And I'd rather just take the super small win than get stuck in a big loss. I struggle with following my own alerts. I can feel that. I've been there. Seems like the ones I'm unsure of get in and run without me, and the wrong ones, yeah, experience that for sure. The human mind is also a weird thing where we always remember something like we need 10 rights to make up for every wrong, or like something like that. So when like you probably just, I bet you're right more than you think you are, and you just seem to remember the wrong ones. But just stick with it. Keep making the plans. Keep learning. Keep adjusting your plans, and then learn some more and adjust them again. Like it's a process, and eventually you just see it enough times. You make enough plans. You have to put in the work. Then you can, hopefully you get on the other side of that where you are right more times than you're wrong. You're always going to be wrong. I'm wrong every day, but I'm definitely right a lot more today than I was 2 years ago. Are you using a MacBook Pro? Do you run stocks to trade and E-Trade Pro simultaneously? Also, how many monitors? And yeah, so yeah, I'm on a MacBook Pro right now. I can run stocks to trade and E-Trade Pro simultaneously on it. I've one of the newer ones. It's pretty beefy. I'm a software tech nerd, remember. But the monitor setup I have is custom PC I built myself. If you're not super techy, like you can just buy a PC. But when you're running just the intense trading software, you have multiple charts up, so much data, you do need some decent Wi-Fi and you need some decent firepower in your computer. My current setup has 2 monitors. It's more than enough for what I need right now. Because I like to filter out the noise. I don't want to look at, hurts my brain, man, if I'm looking at too many stocks. So if I can filter it down to like 6, like that's perfect. I just got to figure out what the best 6 are. And we're way behind. All right, let's try to zoom through some. What amount of slippage can you give on dip buys? Again, I don't want slippage. If I'm buying a dip, I want to buy the bottom or I want to miss it, period. And like if it holds near the bottom, I do not want to be in it too long. Do I consider adding shorting? Absolutely. I need to learn. The only thing that's stopping me is after talking to Kyle and Jack on Twist yesterday, like shorting is just not working for them and they're actually going long more. So I'm going to stick with what's working. I do need to learn how to short though, because there will be a day it just doesn't work as well. So if a stock, so yeah, Gratani does the cut losses intelligently, which I understand. I'm not super great at that because the ones I tried to cut losses intelligently as he does in this scenario outlined, I don't do great. So will cut it quickly, and then I am not scared to buy it back if it just sets up again. Rockets is another alert. It's just another chat room, mostly for long biased alerts. The link is stocks to trade small cap rockets right here. Boom. So I'm in there every single day. I give my watch list every single day. I give my trade plans every single day. The stocks on my scan. Yeah. And then you get to ask me any questions you want for an hour, which is a new feature we actually launched this week. So hopefully see some of you guys in there. I try to be in the challenge chat as much as possible, but it's just a lot to manage challenge work and small cap and my own trading. So for buying breakouts, do you recommend you buy before the breakout? Yeah, if possible, right? So if I find a lot of times going into breakouts, there will be key risk levels and key like buy triggers that are set up before the actual breakout itself. And those are the breakouts I really like because then I can get size in before the breakout, because a lot of the times you'll see a breakout and it'll like chop around the breakout level for an extended period of time. And if you buy the breakout level instead of being in a little early, you will like probably get stopped out. So I'd like to be in a little early if possible, but sometimes the market doesn't let that happen. How do I properly determine risk on OTC stocks when a fake out can easily cause a drop in 5%? Yeah, well, I think the misconception here is it sounds like you're trying to make sure your risk is only 5% on the trade. I would find a level and then like a dollar amount. Now that dollar amount can be a percent of your account. So I wouldn't risk 5% of your account. That's a little aggressive. 1% though, say 1% of your account's $100. All right, so you're going to risk $100 on this trade. What level is important? Don't pick some arbitrary level. If $1 is clear support, risk $1 and then calculate how many shares you can buy. Do it in that order, because that is the thought process you need to have going into these trades. And I know it's a little more complicated, but that's what good traders do. So if you want to be a good trader, stop being lazy. If you were to play a choppy breakout setup on a listed stock, could you open the GVO chart? Yeah, so GVO, I tried to trade this one actually, so got some insight here. GVO is a little choppier. Love going back to the charts. So GVO, the true breakout level, I don't even know what it was, but you can see on the daily there, it was definitely a breakout level. Looks like $4.95, $5 was pretty key. That's probably would be the level, probably $5, because on this day is when it truly started breaking out. I would not have bought that. This action here, if you're looking at it, is after hours and pre-market in the shaded regions. So I don't take that into consideration as much, mainly because if you look at the volume, like there's just much less volume. So when there's less volume in certain areas like that, it doesn't matter as much. So this day it gapped up the 12th. So let's do like a 5-day zooming in. We're on the 12th here. So the breakout level was basically 5 from the previous day, and then it held 5 and then formed a higher low. So where I got in on this was around 540, risking this previous low 520. And that's how I would have approached it. This is a good example of like the breakout was like, 495, gapped above it. Don't chase. Wait for it to confirm. If it runs, it runs. There's going to be another play, move on. But if it starts confirming, holds the breakout again, like at this point, we held the breakout for like 3 hours. Like that's a long time to just hold up. So then when strength comes back in over the 540 highs is set this day, in my opinion, that's a pretty strong buy. You've got a very clear risk level. That's a textbook trade. You want to take the trades that are simple. You have clear levels. You have a clear buy spot. You have a clear risk spot. If you don't have those clear levels, don't get in the trade. Will you give a good comprehensive reason why a ticker's market cap is important? Yeah, so market cap and float kind of go hand in hand. And it goes to the basic supply demand again. If the market cap is $10 million, you need $10 million to double it, right? To get to 20 million for a stock to go up 100%. And that's essentially what it is. When a stock goes up 100%, their market cap has doubled. Where now we go to some company, Apple. Do I still have Apple up? We're gonna pull up Apple. Apple's market cap is, I'm pretty sure, over $1 trillion still. 2.2 trillion billion here, but 2.2 trillion is the market cap of Apple. For Apple to go up 100% a day, you need $2.2 trillion. So I will ask you a question back. Is it easier? What's less money? 10 million or 2.2 trillion? And there you go. Yeah, so this VGOT scanner, I'm trying to put together a little guide thing with just like some explanations on how I use it, so that way it makes sense to you guys. So stay tuned. Would you still care about liquidity if you have a $3,000 account? I would, because there are stocks that are like illiquid. What's one that GAHC I think came on my scanner today at one point? Like this is illiquid. I don't want to be in this stock. So even if you have $3,000, you can probably get in and out of the stock fine, but it's just not liquid. So I would avoid it because illiquid stocks don't run very well, and when they do, it's hard to get in and out of them because the bid and ask are usually far apart. It's just far easier to be in listed stocks. What's my daily routine given I have a job? So I'm Central Time now. I live in Texas. Market opens at 8:30. I usually wake up around 6, chill morning. I used to go to the gym in the morning when I was on Eastern. I'm trying to figure out how to do that when I'm in Central, but like all gyms are closed around me during those hours because of COVID still. So I just have a chill morning, um, make breakfast, drink some coffee. I usually start work pretty early, like by 7 a.m. I'm usually working because that gives me a solid hour of work where I'm just fully focused on work for that first hour of the day until 8 a.m. Where then I kind of shift my focus over to the stock market for the open. Um, but it's important that I'm focused in the morning for work so that way I can get enough of my job done. And then I trade the open, and then I usually go back to more work during the midday chop and then flip back and forth on my scanner to see if there's anything in the afternoon. And then the market closes at 3, and then I usually work for a couple hours after the market open. So, I mean, I have decently long work days, but it's what I have to do in order to maintain just both the job and trading. VWAP scanner I don't think is preloaded. I know they're working on some cool guru specific scans, stuff like that. There's some cool stuff going on in Stocks to Trade. So if you don't have Stocks to Trade, definitely go find it. Sign up. There's a sweet trial deal. When I first tried Stocks to Trade, I joined on the trial deal because I think it was like I don't know. Right now it's like $14 for 2 weeks or a week or something like that. So very cheap just to give it a try. And obviously, like, try it for weeks that you can actually use it. So if you're like, all right, the next week I'm gonna be just able to trade, try Stocks to Trade. It's a really great tool. Yeah, so wash sale is confusing. I don't really understand it. Talk to your tax people. I'm talking to my tax people about it, my CPAs right now, because it's complicated. Stupid IRS rule. Lucky or unlucky to start in this market? I'd say lucky. Like just comparing it in parallel to my journey, I started in 2017, which was a super hot market. And I had no idea what I was doing. I lost money. I blew up my account as I was describing. And that's the year Roland turned his 4,000 into like 400,000 in 1 year because he was just prepared. So like it inspired me. I don't think you should be down on yourself and like, oh man, like market's hot, like I'm too late. Like, no, be inspired by it, learn. Like it's gonna take some time, but like if this is what you want and this is like something you're truly passionate about, learn as much as you can now because there's so many learning opportunities now. Like if I would have started in 2019, I would have been like, oh, this is lame. Like there's no plays ever. I don't understand how this works. No one's making any money. Like a lot of traders struggled in 2019, but I was able to see that like stocks can move. Trading like stocks are super hot, and like Roland was able to turn 4,000 to 400, and like that's what I clung on to, and that's like what inspired me to just keep going. So, do I wish I studied more? Yeah, but at the time I probably thought I was studying a lot. So there's always more levels you can get to. Do I calculate risk on sub pennies? It's tough. They usually mess with my head, and that's a lot of the reason I don't like to trade them. Because once you're buying millions of shares, it doesn't make a lot of sense. Do I use Stocks to Trade breaking news? I do, but I rarely hop in on the breaking news. I'm just not quick enough, or comfortable enough. But like, if I see a breaking news alert, I'll look at this chart. I usually throw it on a list, and if it's holding up for a couple hours later in the day, it's something I want to be a part of. So it's one of my scanners that I use to try to find stocks. Yeah, so elaborate on risk reward. Most speakers talk in cents, but 10-cent risk level is different depending on the stock. Yeah, so when they say that, they're probably just doing hypotheticals. Sorry, I got distracted. So like they're probably looking at a stock, and if a stock is trading at $1.10, and the support or risk level is at $1, at that point it's a 10-cent risk level. It's because they're buying it at $1.10 and they're risking $1, so they have a 10-cent risk level. And then the reward, like ideally, like In a picture perfect world, you'll be able to get at least 3 times your risk, but the stock market is far from picture perfect. So, I mean, I don't buy stocks unless I think I can at least get 3 times, like a stock can go up 3 times the level I'm risking, which I've talked about just a couple times earlier. I have a hard time letting my plan work. What's your advice? Maybe you're trading too large. If you really think you're selling too soon, like I sell too soon all the time. One way I'm battling this is like when I think I want to sell, I'll sell like 90% of my position. So then I'll hold 10% and just try to hold it just for that much longer to let my plan work. And then over time, maybe I'll sell 50% at that point and then 50% higher. Trading's a game of just constantly evolving. And that's just what I'm currently doing. I think that's probably a good thing for you to try too. Any thoughts on SPACs? They're wild, man. They just go up. I've watched a lot of them. Seems like some crazy bubble market, in my opinion, but it's working. Fortunately, I haven't paid enough attention to them until recently, but this month and last month, there's been some crazy SPAC runners. I know there was in 2022, but basically as soon as news comes out on these SPACs, they start running. What's your biggest challenge whilst building up your knowledge bank? Information overload, probably. And to battle that, it would just, like, you want to take in as much as you can, and that's something I keep saying, but you can't take in everything at once. That's just not possible. So segment it. If you want to learn shorting, start with some shorting patterns. If you want to learn longing, start with some longing patterns. I started with the OT Swizzle, which is an afternoon breakout play on an OTC stock, where now my main pattern is a variation of that on listed stocks, where it's an afternoon breakout, very similar on listed stocks, where like I learned that over time because it's a different market, but I was able to filter it. And I still have a long list of things to learn with short selling. When did you know you could self-release out of PDT, adding cash without being overconfident? For a long time. And I know a lot of people didn't like that I did it. For a long time in 2020 until June, I think, I kept my account at $30,000 because it was close enough to PDT to remind me if I got stupid, I was going to go below PDT. But close enough where I didn't have to deal with constantly going under PDT or something. I would have to take a number of losses in a row. But it was close enough, if I make one really stupid trade, I'm going to be below PDT again. So I'd wire out my profits daily. Over time, I upped it. But even in November, my account size, my main account at E-Trade was only $50,000 for most of the month. I was at $50,000. Every day I'd wire out any profits I had. If I lost, I just started with less than $50,000 that next day. And yeah, doing that, I was still able, I slowly sized up my accounts more than 50,000 now that I keep it at. But I was just protecting myself from myself. I'm a very cautious person, even though some of my trades, I guess, could be considered aggressive by some people. In the grand scheme of things, I want to do everything I can to make sure I stay in this game as long as possible. And that's just one thing I did. When you say low float, I understand, I know what the float of the stock is, but what percent of a stock's float makes it low? I don't really think of it that way, I guess. Holds. If I see, I don't really ever even look at outstanding shares. If the float of a stock is 10 million, that's all I need to know. And even that, it just lets me understand, this has a really good chance of running. All right, Michael Good. Yeah, so that VWAP scan, I'll pull it up again. Maybe I briefly explained it wrong on the midday one. So over $1, market cap less than or equal to 300 million, which basically is how I find low float, low market cap stocks. That is the filter that does it, up more than 10% on the day. The volume is greater than 25 million. And that's just like my liquidity portion of it. And then this one is confusing, and yes, I probably said it wrong because when I was building this back in the day, it confused me. So the way it works is VWAP is less than or equal to the last price by 2% or more. So what it will do is it'll find the last price of a stock has to be above VWAP by more than 2%. That's what this is doing. So like any of the stocks will pull up on this scanner, SunW for example, the price of the stock will be above VWAP, at least at the close by at least 2%, or maybe it's 2% now probably. So yeah, so that's what it's doing. Thought process there being what Tim Grittani said in a webinar, and it stuck with me. When a stock is over VWAP, buyers are in control. When a stock is under, sellers are in control, because it tells you an average where the average person is in the stock. Again, it's not perfect, not a holy grail, can be skewed by volume, but as just a guide, if a stock's above VWAP, it's strong in my opinion. Buyers are in control, shorts are in trouble because they're the average short, the average is underwater, the average long is up, and it just means the stock is strong. So that's why I look at those stocks. That's why it is a criteria on my scanner. So hopefully that elaborated a little more. Beyond the PDT, gold. That was my baby. Hopefully you guys like that. But now I do twist, which is really good content with a lot of traders on there. Do I use moving VWAP or regular VWAP? I think it's just regular. I know there's a bunch of different versions and they all seem to work really well. I should probably do some more research into that because I think there's like average VWAP or anchored VWAP too. Like there's a bunch of different versions. Do you use the same rule about changing from 1 to 5 minute after 11? Absolutely for OTCs, especially because sometimes they on a 1 minute chart will look choppy, ugly, illiquid. I'll flip to a 15 minute towards the end of the day on an OTC if I need to, just so that way it gives me a clean view of it. Does your job ever cause you to miss plays? Sometimes. Again, the stars aligned. I'm very thankful. I would say lucky, but I'm a believer like you kind of make your own luck, because I easily could have been a software engineer still. But just what I've done over the last couple of years, like I was able to get a remote job. A lot of that was because of COVID. That is lucky. But like even meetings like are on Zoom for me now. So because of that, like, will I miss plays occasionally? Sure, absolutely. But more times than not, the job doesn't get in the way. Also super flexible schedule, great boss, work with great people. I always get my work done. Sometimes I just work at weird hours and I'm fortunate enough where like that's okay to do. Where can you check the float quickly? Yeah, Yahoo Finance, stocks trade, I think I've shown it a couple times. Bottom left corner is in there. Anyone know commission fee for IB OTCs? Pretty sure it's high. I don't know exactly, but IB is not the best place to trade, at least low priced OTCs. Can you post the twist URL? I think someone did that above. So yeah, check it out. Twist is what's up. Did you size up after going over the PDT rule? Not initially. It just changed. Like I was just more comfortable getting in and out trades. Sized up over time as I just got more comfortable. And like when I first got over PDT, it was basically all my money. It wasn't money I needed to live. Like I could have survived, I guess, if I lost it all. But like it was all my money. So I was very careful with it, very careful with risking, where like now, like I have money outside of my trading accounts and savings accounts and whatever. So like sizing up now and taking bigger risk, I'm just more comfortable with because my account's just larger. And that just comes with time. Yeah. Department of Defense software, I had an internship with those and it's just tough. It wasn't fun. That's why I decided I didn't like software engineering. So I feel you. Feel your pain, man. What's your full-time job? Yeah, like the best way to describe it is like I'm a senior marketer. I do a lot of marketing stuff. You said you put money in to get over a PDT, even though your account was over 25K. What are your average positions? I don't know my average positions. Better answer is probably my average risk. Was still like $100, 150 maybe tops when I was over PDT for a while. That was until January, February when I started getting more confident. And that confidence just came from after like risking $150 for a couple months. The amount of money became like, not numb, but like I was okay with losing it because I was able to win. My accounts got bigger. And it just takes time. You can't rush it. You try to rush it, you're flirting with fire. Currently, your massive inspiration. Awesome. Yeah, I mean, computer science, software engineering, great degrees. Don't regret it at all. Have no regrets. I don't use it, but it's really good skills. Gives you some different ways to think about things. And I do think you have a leg up in just the technical world we currently live in. All right, got another one for you. I was caught in a rug pull today, blew past my stop, so I was looking for a bounce, but I have a secondary stop, blew past my secondary stop. Market order? It depends. Market order on OTC stocks, E-Trade I don't think even lets you do a market order. Market ordering on OTC stocks, don't do it. You're just gonna get screwed. But the liquidity on a lot of these low price stocks, like as long as it's over $1, like I market order into a lot of these things. Listed stocks again I'm talking about, because the liquidity is just there, and a lot of times it's faster. My fills are gonna be the same, because 1,000 shares when a stock's trading 100 million shares in a day doesn't mean anything. On a OTC stock, need to stick with limits. And yeah, like, I mean, it happens. I get stuck in rug pulls every now and then. It's just part of the game. When it blows past your stop, you just got to eat it. Sucks. There's no way around it. It's always going to be a bigger loss than you think. Just take the loss, move on. Otherwise, you're going to get stuck in a situation like that. Speak a little about small cap. Yeah, so small cap, here's the website. I can throw it in chat. I know I'm way behind on questions. It's Tim Bowen, me, and Papa John. 3 of us in there. We alert plays we're watching, alert trades we're in. It just gives you insight into those 3 good long bias traders. It's important. It's a long bias room. We don't short in there. And that's what it, like, for me, the turning point of my career was being able to do the Beyond the PDT podcast and get in the minds of these successful traders. So that is more or less the goal of this room, to give you an opportunity to get in the minds, the plans, the ideas, the strategies of successful traders. We've now opened, we're calling it office hours, an hour a day, because I know there's a lot of chat rooms going on out there, but you can just hop in, ask us questions on perhaps why we were watching stocks that you think we should be looking at, trades we made, risk reward questions, all the basic questions, all the questions you're asking me now, but it's an hour a day, every single day. Yeah, so I dropped the link. It's right within the StockStrade platform. There is a trial offer to my knowledge. I think it's pretty cheap, 18 bucks for 14 days, and you get small cap rockets and the StockStrade platform. So if you just want to try it out, that's the place to be. Why buy before breakout rather than after? Doesn't that increase the risk of it double topping? Sure. But if you do it right, like your average is going to be low enough, it's just going to be a scratch trade, break even trade. It's tough to do speak about it without an example. But my experience, the way breakouts work is if you buy straight up into the breakout, like your entry is going to be worse than mine, and you're going to have a higher chance of getting stopped out because everyone knows what a breakout level is. So if there's any edge you can have, any key risk level, because you're watching the stock before the masses, you want to take advantage of that. All right, guys, I think we're running out of time. Yeah, we're already 5 minutes over. I'm going to run through some last questions. Does VWAP help you identify a short squeeze? Yes and no. I would say a short squeeze is more likely to happen over VWAP than under it. But if a stock's like under VWAP for an extended period of time and swipes through it over it, I mean, that shorts are in trouble too. They could definitely be in a short squeeze there. I don't really think about it that way. It just helps me find strong stocks in the market. So yeah. All right, this is the last one on OC's panic dip buys. If you miss your entry, do you let it go or do you get a new order in? Often this happens to me. I know a broad question. Yeah. So one quick tip that we can end on is like OZSC. Let's go back to that one because that literally happened today. I know I have it in here somewhere. All right, we'll just type it in. OZSC. So this one bottomed. This 3 print was a misprint. It's on all your platforms. Just some false prints went through. The bottom was 3.1, but most of the bidding was happening at 3.2. So I actually put my limit order at 3.3, even though the bids and asks were at 3.2. Slightly above, not a huge amount above where if I actually get filled up, like if I put it at 4 cents, I don't want to get filled at 4 cents. It's stupid. But if I'm willing to get filled up to 3.3 just to give me a better chance of getting filled, and yeah, I miss these all the time. You're gonna miss them. It sucks when you miss them, but just a little tip to help you get filled a little better. Just put it like slightly above the order. Don't try to hit the ask exactly. Try to put it a little above it. You're probably gonna get filled, and most of the time, you're gonna get filled at the right part. All right, so that's all I got today, guys. Thank you so much. Great questions. We're gonna do another one of these soon.